Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today we welcome Pascal Hügli. Pascal has written a very interesting new book on Bitcoin. He's also the host of an excellent show on Bitcoin finance economics. And I wanted to have him on today to talk about the philosophical side of Bitcoin versus the dollar fiat credit system. Pascal, welcome to the show.
Yes. Hi, Nick. It's great to be on the show. As you mentioned, I had you on my show as well, and now I'm finally on yours. So it's amazing to be here. I've been vivid listeners of all of what you've been putting out. So congrats on that.
Thank you so much. Tell people quickly about your book and what you wanted to add to the suite of Bitcoin literature out there.
Yes, so this book is kind of weird the way it came about. I wasn't planning on writing a book. I was traveling the world as a digital nomad, sort of sovereign individual. And then I was in Mexico and I was talking also by luck sort of to this Mexican billionaire, Ricardo Salinas. Maybe it does ring a bell with some of the people that listen to your podcast, but he's like this Bitcoin maximalist out of Mexico, very esteemed guy, as I said, a billionaire. And I happened to do an interview with him, and there we had a really interesting discussion on just Bitcoin, government, and everything that sort of surrounds the philosophical case of Bitcoin as well. And that's then where the book came about. Because of this interview, I felt like, okay, this guy has some interesting stuff to share as well. And we asked him to write this book. He agreed. We did a lot of back and forth, and then also brought in our own concepts. And in the end, I think it's sort of a book that talks about him as a billionaire, who is endorsing Bitcoin. Then also somebody who has gone through like a hyperinflationary period back in Mexico, with the Mexican Revolution, so to say. And then also some new concepts that I've just been juggling in my head for quite a while. How will Bitcoin adoption in a realistic sense really take its way? How will it unfold? And I try to be as realistic as possible, and not so in the sense of like really Bitcoin rosy stuff, where you want to write stuff that people want to hear, but actually write stuff they might not want to hear, and just sort of explain how the world will unfold. So that's what I guess we added. What type of color we added with this book.
Great. And we'll make sure that we include a link to your new book in the show notes. Now, the reason that I wanted to have you on is because I've been listening to some of your shows, and we don't agree on everything, Pascal. I mean, who can? We have different, maybe different opinions about the path of how Bitcoin and the credit system will interact in the future. But they're very specific differences. And that's what I love, is that you have a framework around Bitcoin, stablecoins, the credit system, and how they'll interact in a very specific way. But what I really like most about your recent content is this idea of, is it fair that the credit system is allowed to expand like this? Who is it in the interest of? Who does it disadvantage? And is that fair? Now, at the Bitcoin layer, our listeners, our readers will know that we're not debating whether or not these systems are fair every day. That's not what we do. We're analyzing markets, rates going up and down, bond volatility. So we don't get to have this conversation. It's not really what we are here for. But it is so important for people to think about what is fair, what is right, what is just. And justice is an important concept, and one that I think is more important to us than fairness per se. But I would like to turn it over to you and ask you, the credit system that we're living in today, is it fair? Is it unfair? Is it just? Is it unjust? And what does Bitcoin bring to the world?
Yeah, it's a very deep philosophical question in the end, I know, and it's probably hard to answer because I'm coming from a similar venue in the sense of that I have this libertarian background, you know, like almost an ideological backpack, so to say, of all these ideas, and that's why I originally discovered Bitcoin as well, and then I was like, okay, this thing is going to change the world because it hasn't existed so far, you know. And then obviously, the more you are in Bitcoin itself, the more you see it unravel in the real world. You see that it's also interacting with stuff that's happening in the real world. And as you said, there is a real world established fiat credit system, ecosystem, if we want to call it that. And Bitcoin is trying to interact with this. In some sense, it's trying to maybe supplement this, you know, and even usurp this. So it's all these different questions that come up here, and I've come to the conclusion so far that and this is probably me trying to be as value neutral as possible, as non-normative as possible, that I don't really want to judge, you know, because I do have my hunch and I do have my ideas, and I feel like the world is never fair, you know, in the way that it's constructed, and then I guess also the system as it is constructed today, or as it has grown also, or emerged maybe even spontaneously, you know, is not fair. Yeah, that's for sure. But what can we do about it, you know? And to me, I came to this conclusion. I just want to try to understand the world, and from there maybe share my knowledge, and then people can draw their own conclusions and try to maybe flock to a different system that might be profiting off of this sort of unjust system that we have today, you know. But my approach is really trying to understand, and then not really kind of put the blame on the system itself, not even the player. I mean, there's a saying, don't hate the player, hate the system, you know. But I'm just trying to understand how things will unravel without putting on these, as I said, Bitcoin colored rosy glasses, and that's probably where I'm at the moment when it comes to this question. And that really got me thinking also in my podcast. You know, I want to talk to people who might not have this similar view. And I started talking to a lot of MMT colored people, something I haven't been agreeing, and I still sort of feel philosophically and ideologically have a hard time agreeing with them. But then when I listen to them, I'm like, they are very accurately describing the real world of how things work in this fiat-based credit system. And so I want to understand how they see that evolving, and from there maybe draw my conclusions, then also how this will affect the whole Bitcoin system and how it will be sort of reciprocal, so to say, you know. So I hope this sort of makes sense.
Bitcoin market cycles usually tend to follow this boom and bust pattern, parabolic spikes and brutal crashes, but this time is looking materially different. The Bitcoin checkpoint from Unchained and our friend James Check at Check on Chain goes through the current 2023 to 2025 Bitcoin bull cycle and really analyzes it to see if Bitcoin's market structure is being materially reshaped. Make sure to go to unchained.com/TBL to check out the free report today. Blockstream, where the future of finance runs on Bitcoin. Go to store.blockstream.com and use code TBL for 10% off. Pick up a Jade Plus hardware wallet. It integrates seamlessly with your Blockstream app, and it's the perfect way for both pros and beginners of Bitcoin to get started with your cold storage. Store.blockstream.com, use code TBL for 10% off. Now get into why you say the system is unjust. Let's say today's viewer doesn't have a strong background in why the current credit system does an injustice to a segment of the population. What specifically is it that you see as unjust from your lens?
Mm-hmm. Yeah, I mean, in the end, it's probably this sort of institutionalized money creation that we have, and there it already comes down to nuances in terms of what is actually money, what is being created there. We have so many different things which are floating around in this system, but I think that's sort of it, that a bunch of players are sort of pulling these levers or levers, and I mean, most of the people don't get to play at these levers, and that's why I think it's fundamentally unjust. And then I think, because of these maybe injustices, or I would even call them like just sort of blemishes that the system has, it tries to adapt, because it might not call itself unjust, but it sort of feels that it needs some sort of adapting, and there I think is where the status quo can potentially adapt to a new world. And that's where I kind of feel we're at right now, that it's moving from the status quo that we have to a new world where I feel like it will ever be more MMT like, to call it like this, And so maybe I have this slide. I want to take you through some of these that I have here. So on slide 2, I titled this "Things Get Both Worse and Better," and that's probably where I want to emphasize again. The existing system, I would consider it unjust as well, but then there is this Bitcoinization happening, which is maybe something which gives me hope. And then there's stablecoins, which come in, a huge topic as of now, really grown in importance. Everyone is talking about them. And now I'm trying to put together, okay, how do these things all play together? The status quo, stablecoins, MMT, so to say, and then Bitcoinization. And on this slide too, you see, the status quo is really about central banking, where reserves of today's money are really the base money that we have. We have commercial banking today, which is fractionally reserved banking liabilities used as broad money. And there we already see that's some of the problems that come with this as well. It's fractionally reserved. It can lead to boom and bust, so to say. And what is good about this old system, quote unquote, is still that we have sort of credit creation, which is decentralized. It is bestowed onto the banks to do this credit creation, because it's believed somewhat that these banks are still in competition with each other. So they have a natural force that keeps them in check when it comes to the credit creation, the bank money creation, this broad money creation happening in the system. And then we have the Treasury, which provides UST as collateral, something which is maybe also instrumental, but we don't really have to get into this as of now. And so this is really the status quo. And if we then move over, I think where we're going, it is this MMT world where central banking will still be there. I always had a hard time thinking about how this will evolve. I always felt like central banking will become somewhat obsolete altogether, and the Treasury and the government as such is going to sort of hijack the entire monetary system. But now with these stable coins, I feel like there is the potential for central banking to stay where it is, maybe lose somewhat of its relevance. But then this other entity comes in, which are these stablecoin issuers, And I feel they are really fully reserved banks, quote unquote, who can potentially disrupt this commercial banking system, and with it, the bank credit creation. And I want to get into this in a little more detail later on. And because I believe that there will be sort of this commercial banking disruption and the private bank credit disruption, I feel like somebody has to fill in the gap. And there I feel it will be increasingly the Treasury, something we hear today people talking about in terms of fiscal dominance, like the government exerting more power over the system. And that's where I think it's going, because when private bank money creation is disrupted, somebody still has to provide the credit, and I feel like it will be more and more these centralized entity, the Treasury, which will create the credit in the first place, and then also function as an allocator, And so last but not least on this slide, we have then also the Bitcoinization, and I feel like this is the Trojan horse, which is working alongside this system as I just described it, and where I think it's going. And Bitcoin will sort of profit or benefit off of this, because it will be acting as this primary debasement valve in that system, and that means Bitcoin will ever be more financialized, creating all these different flywheel effects. We might have some time to get into this as well. And because in that system with Bitcoin is still more of a free market, because what I just described with the old system, I feel like we're moving increasingly away from free market. We're not a free market, not today, but there's certain elements, as I said, the competition between different private banks, in bank credit creation. If that is sort of obsoleted, then obviously it's centralized, and you have even more capital misallocation, which will be happening, and there Bitcoin will fill this void, of a system which maybe not that much capital misallocation is happening. And so I feel that that's really where Bitcoin's position comes in. But that was just the broad overview. Maybe we take it a little.
Let me ask you a follow-up before you go to the next visual that you want to share with people. The need for a native credit layer emerges on Bitcoin. This is a topic we love to explore. We'll get there. But you also mentioned that credit creation through a stablecoin system is possible. Can you explain what you mean by that? Because, or maybe I didn't understand it correctly, because you suggest that stablecoins are a fully reserved system, which I agree with, because they hold treasuries on the other side of their liabilities. That's the layered money relationship that stablecoins bring us. But what is your vision or idea as a credit creator as part of this process? Or is it just that treasury aspect where the treasury is involved in allocation of credit?
Yes, I think it's more to the latter point that you mentioned. As I said, this is still also sort of in stealth mode for me, this whole slide deck. I'm still just thinking this through myself, so I'd be happy to get feedback as well from all the listeners. But the way I think about it is really, on slide 3, maybe I can answer this question to quickly go through this. We have this stablecoins, this digital full reserve money, something I probably don't have to get into because a lot of people are familiar with it. It is fully reserved, these stable coins. It's reserved by US Treasury, or almost entirely by US Treasuries as of now, short-term bills, and this is what makes them so special. And in that sense, they are a full reserve bank, but quote unquote bank, because the stable coins vis-a-vis normal commercial banks, and I think that's what you were hitting at, they don't really extend credit. They don't create credit. They are not in that sense banks, because exactly they're fully reserved. They might be important when it comes to the payment rails and stuff like this, but as of now, they're also not allowed to sort of extend credit. And I'm not sure if this is going to change anytime soon in the future. But where I believe this credit creation and credit allocation function will come in will be at the level of the Treasury itself. That this is going to be creating sort of the credit then, which is then being bought, so to say, by the stablecoin issuers, and then the Treasury gets the money, so to say, and can sort of allocate it directly into the economy. And that's where I think, why do I think we're going this way? Because as I said, on slide 4, I had this title, New Claims on Central Bank Reserves. Maybe something we just quickly can go over. I just feel like stablecoins, they're now also competing for these reserves, and bank deposits in the end from people, households and firms. It's only just starting right now. And this is where it clicked for me. There might be no reserve amount change in aggregate, so to say, but there is competition going on. And these reserves, which were sort of reserved as of now only for banks, they are no longer exclusively reserved for them, because there's a new demander, so to say, these stablecoin issuers, And so central bank reserves will have to underpin a new parallel liquidity structure. And now this is maybe not so important, but then on slide 5, I come to this bank credit creation disruption. And that's where I think we get to the spicy stuff. As I said, households and firms, in my view, will probably increasingly hold like stable coins, and in that way these deposits and reserves will drain from banks into stable coin rails. And that then to me also sort of means, as we also elaborated, US Treasuries will no longer sit exclusively with banks. They don't do today, but increasingly at the margin, maybe they will move over to new balance sheets, which are the stablecoin issuers. And in that sense, I feel like bank credit creation can really become hampered, because a bank, obviously, it's creating its deposits out of thin air, so to say. There's this theory out there that it's not the deposits that create the loans, but the other way around. The loans create the deposits. This might be true, but in the end, I think the banks still have to sort of fund it, and that's where they're going to funding markets, to really fund that. But I mean that if they increasingly lose the ability to get a hold on these reserves, then their way at the margin to extend credit will be discouraged, And I'm then just trying to ask myself, okay, what will happen, if banks sort of role shrinks to custodian of reserves? Will credit intermediation get potentially starved? And that would be disastrous, for the economy as such, because banks are the driver of economic growth with their bank money creation. Will the business cycle as such no longer be valuable or valid in that world, And there, I think, to now hopefully answer your question, that's where I think then the Treasury or the government, so to say, has to come in, but somebody has to kind of fill in the gap, when it comes to this credit creation. And that's where I think the Treasury government / will create the credit and then also increasingly allocate it. But then again, as I said in the beginning, this also means for me that credit creation goes from this today still more market-driven decentralization type to more of a Soviet-style centralization credit creation allocation type, because this still healthy banking competition is hampered. And in the end, this to me can only mean one thing, that there will be ever more increasing misallocation of capital in today's system, because I'm not a believer, as you are probably, that the government is an efficient allocator of capital. But it sort of will have to, because otherwise, if banks don't get to create the credit anymore, then who will? And somebody needs. And then it will probably be governments, even though they don't really do it efficiently, And in that sense, just to finish up this slide, I feel like there is more potential for market disruption because of this misallocation of capital. These fat tail volatility events, they might increase in such a world. Wealth inequality, to me, will also exacerbate, because if the Treasury is increasingly the credit allocator, and the money to do this they get through the stablecoins who buy their sort of debt, that means it will be more a political game in that sense. Who gets to get the credit? It will be how good a network do you have to the politicians, to sort of vouch with them and root with them that they consider you in this credit allocation scheme, And I just want to put this, obviously, this is all very still far-fetched. It's to some extent, it might be already the case today, but I'm just trying to picture here a world where it might be going, And so just to understand this also fiscal dominance talk, that's really talk of the town today. And I feel like that's where we're going, because that's a good sort of intellectual visualization for me, where we're going, so to say. I hope this makes sense.
It's all very fascinating to think about. And once again here, there's something that I strongly agree with you on, and then one point that I'll push back. So, which I know that you're interested in this feedback as we discuss these open-ended items that nobody can predict. I strongly agree that the Treasury has already become a much larger allocator of resources in that they increase the size of the Treasury market by borrowing, and they spend it out into the economy, hoping then that how they spend it out will then generate the tax revenue back for and feeding back. So I strongly agree with that. And I also agree with the fiscal dominance side of the equation, which is that the sheer quantity of government spend warrants that same amount or more to keep the system going because of the way that it's evolved. And when you look at healthcare being 20% of US GDP, that's evidence right there that the entitlement spending, which goes to retirees and then to the healthcare for the retirees, that's where the government has already committed its next 50 years of spend. So that's locked in. But then I'll bring a headline that hit this morning as the first article I read today, and we'll flash it up for people, which is that JP Morgan Chase says it will invest $10 billion into industries critical for national security. Now, $10 billion is a very small amount, but the bank said that in a statement, it would invest up to $10 billion into companies in 4 areas: defense and aerospace, frontier technologies, including AI and quantum, energy technology, including batteries, and supply chain and advanced manufacturing. So maybe it's not, Pascal, that the Treasury is the only allocator, but it's the Treasury plus the big banks, so that it's, you mentioned Soviet style. I cringe, to think about the oligopoly of banks that already exist in the United States. But this is the world, the country under which we live. And if the banks are still keeping the credit creation system going via JP Morgan, but this headline reads directly like it was written by the admin. So how closely is JP Morgan Chase now cozying up to the US government and getting them to basically execute on their plan of keeping this fiscal dominant system going, but also joining it with the private sector?
Yeah, thanks a lot for bringing in this nuance, and I would agree. This is exactly to my point. I mean, the thing that I maybe now in too much detail explained regarding the stable coins, and why they will, in my view, sort of disrupt bank credit creation at the margin. It doesn't mean that banks won't be there anymore and create no credit, but it will be at the margin, maybe sort of be hampered, as I said, and that needs to be, that slack needs to be filled, and there different types of entities can come in, and I predominantly see probably the Treasury itself, which is then with stablecoin issuers as their quasi-state-owned bank, and they don't even need these CBDCs that everybody is talking about, because the stablecoins do just the job well when it comes to this. But then the one thing that you mentioned, I saw this headline as well, and I feel like, it goes together that even the government tries to maybe behind the scenes then also exert more power over these banks, and it's probably all doing so already today. I mean, a lot of the feedback and a lot of the ideas that I'm trying to regurgitate here is coming from a guy that I interviewed myself. It's this guy, Ben Kitson-Chuck. I think you listened to one of the episodes I did with him, and that he speaks of a enterprise-owned state, in that sense, where he also sort of says, okay, these Mag 7 companies that we have today, they're so systemically important for the US that this is, it's this corporatism in the old world that everyone was talking about. He now calls it enterprise-owned state, that this is so closely interwoven that it's also kind of hard to say or blame it all on the government itself. It's also coming through these private entities, which are very important, and they're sitting all at the same table. We saw it when Trump got elected. All of the big tech guys were sitting at the inauguration which really tells you there's constant discussion going on between, and everything is probably turned upside down and then discussed, and only jointly is there some sort of discussion or decision taken. And then the big banks, I guess, yeah, they are just prolonged arms of government as well. In the end, it is really this triumvirate of treasury, of commercial banking, of central banking, now maybe the Max 7, so it's even more, it's 4 actors. But yeah, to your point, I feel like it's hard to pinpoint where it will come from, but in my sense, it will increasingly come from big corporate or treasury centralized entities, and less so from the actual market participants, which is then again kind of stressing the fact about the Soviet style centralization that I just see increasingly going on in the world.
Yes, enterprise-owned state is a brilliant way to frame it. We think about the presidency, perhaps, and I'm not trying to single out any individual or firm, but basically you're looking at the first ever Andreessen Horowitz style administration that
Yeah.
we've ever had. Jensen Huang, and for the first time has as much sway as a Jamie Dimon. And
Yeah.
and we also know about Palantir and just how big tech is, like you said, very interwoven with the state. And is it state owned enterprises, Soviet style, or is it enterprise owned state? And where is the line? It's very difficult, maybe to measure where that exists in particular. Now, the last question I want to ask you, now tie it all in. A fascinating idea on slide 14 of Bitcoin bills of exchange, merchant credit in BTC. Explain to people your vision in the phase 3 native credit of Bitcoin's adoption curve, because we already know that it's been discovered as a store of value. Doesn't mean that everyone has discovered it, but many have. The narrative is well established for over a decade. Financialization, that's what we cover here, and how that has evolved. Native credit is not here yet. So what's your vision? Because this e-bills idea is fascinating.
Yeah. Well, maybe quickly on slide 7. I mean, I want to make the segue. I want to make the segue into Bitcoin, but because of what we established, no matter where it's coming from, this credit creation, it will still be a thing in the fiat system, and so I think it will only strengthen the point that there will ever be more chronic fiat debasement, which will accelerating. Especially if it's centralized, and then you have capital misallocation, and it needs to be papered over, and so we would have to talk about this in a lot more detail, but just leave it at that for now. Chronic fiat debasement will keep on happening, and in that sense, if we then jump to slide 10, I feel like there must be this relief valve, that everybody is looking at, and because of a lack of alternatives, today's relief valves really real estate, equities, gold, but I feel like in a digital age as we are now in, Bitcoin is poised to become this new primary debasement valve. I think Luke Roman said it really great when he said, we inflate the dollar against gold or Bitcoin, nobody riots. If you inflate against wage and rent, society cracks, and I feel like that's what speaks for Bitcoin in that sense, as well as for gold, and then again, Bitcoin, because of this, will grow in size, obviously, because it is this release valve, so to say. But then for Bitcoin to not only stay a sovereign or store of value, and for it then also be maybe an entire financial ecosystem on top of it, which then is a new economy that can be emerging with less of this centralized misallocation of capital. We have to have a lot of more ingredients, And there we get to slide 14, as you said. I tried to sketch this out in different phases. And obviously we're now in phase 1 still, I guess. So we're just now transitioning into phase 2, where Bitcoin is this great contender for a base layer money for this new system. Financialization will strengthen this, and Bitcoin at that point will start to behave like an actual base layer reserve asset. But then this is not it. There will have to be an elastic monetary layer on top of Bitcoin as well. for it to really be useful in the real world. I don't buy this idea that people just say Bitcoin needs to hit 10 trillion, and so at this point it won't be volatile anymore, and then it will be used as a medium of exchange. Economically speaking, this doesn't make sense to me because Bitcoin is fundamentally absolutely fixed in supply. Purchasing power volatility is programmed technically into Bitcoin and also economically, and so it will be maybe like gold. We will be less volatile, but we will never achieve this day-to-day purchasing power stability, because demand shocks can always kind of upheal the entire system, so to say, And that's why I think this monetary layer is so important. And there, I have to be honest with you, this is also something I've been trying to contemplate for so many years. I just recently interviewed another guy, Hubertus Hochhofner. He's from Austria, and he's building now this bit credit protocol where he's trying to mimic these bill of exchange, that used to work way back in time and made gold sort of useful in the real world economy as well. It wasn't entirely gold coins in the 17th, 18th century, I guess, who were circulating. It was more these bills of exchange where you sort of issued them against production with a producer and then also a supplier. And I still have to wrap my head around how this actually functions. It will probably be better to talk to Hubertus, who's building this bit credit protocol. But that's where he thinks we have to build this native credit system on Bitcoin, to provide for working capital loans, for commercial paper denominated in Bitcoin, and to really then also provide for merchant credit in BTC, And I think that's logically, very high level speaking, this makes a lot of sense to me, because only if we have this elastic monetary layer will Bitcoin ever be able to reach MOE, also medium of exchange adoption, because this is just something I think which was this narrative was sort of reverberated in the Bitcoin scene, maybe because of Saifedean Ammous or other people. But if you read the original Austrians, and I've read them all in German, I have the original text because I do speak German, then you can really see none of them were really vouching for a base layer money. Well, maybe a base layer money which is fixed in supply, but they were all saying we need this elastic monetary layer on top for businesses to kind of adopt something as a real sort of currency and medium of exchange money then. And I think we are just in Bitcoin rediscovering this now after 15 years, because I see more and more people like Hubertus and others coming to this conclusion, and then figuring out that, price cannot be the only sort of valve in terms of adoption, because that's usually said by other people who I respect as well, like Parker Lewis. They're saying, Bitcoin is perfectly elastic. It's just priced as moves. But I feel like this is not the entire story. So I hope I could give some nuggets here, even though we would have to go in a lot more detail, but we don't have time anymore. But I hope this sort of helps to kick off some thinking.
Yeah, Pascal, it's important to introduce the concepts, then to chew on them, unpack them. We'll talk again. The point here is to explain that the ideas of Hamilton and Lincoln are in line with some of the Austrian school, and the idea that production itself can be a base layer or is the backing for an economic system, not the credit creation itself, but the production that empowers the credit issuer to make that loan or to extend that credit. So we'll continue to unpack these important concepts. Thank you for joining us today at the Bitcoin Layer. Tell people where they can find your excellent work online.
Yes, you can find me on X under at Pahueg, Pahueg, and then also on YouTube, Less Noise, More Signal, and I have a newsletter by the same name. So yeah, just hit me up. If you Google my name, you will probably find it. I'd be happy to connect with some of you.
Less noise, more signal. Pascal Hügli, thank you so much for joining us here at the Bitcoin Layer. I'm Nick Bhatia. We'll catch you guys next time.